Hi, welcome back to the B2B channel. I'm your host, Aaron. But seeing as we're getting all familiar with each other, I think you can call me Reezy. That's breezy without the B. So, before I jump into today's session, let me talk to you a bit more about B2B's ITC program. They paid me to do this, so I have to do these things. Hashtag paid promo. So how it works is it's structured as follows. We've got a list of tutors that deal with ITC and APC. You can find that list in the B2B website. The link should be on our channel or in the link below. The sessions are generally structured as follows. You'll work closely with one of the tutors to help you get to grips with the basics of breaking down an ITC paper. That includes identifying triggers, seeing how it integrates between different questions and issues, and how to approach and prepare yourself for on the day. This may also include a comprehensive script review, i.e. you get your script reviewed for areas of improvement, where you lost marks, how your handwriting affects your work, and essentially your overall feel. This will also include a session or two with myself where I'll tackle how to score marks and just to prepare an overall exam technique, etc. We are going to be looking at B2B investment holdings again. And this time B2B Investment Holdings is incorporated in Australia, so in Aussie, but it is managed in SA. And in this example, they bought inventory for, let's make it 3,000 Australian dollars, and they had a loan of 5,000 Australian dollars. Okay, so B2B Investment Holdings, that's what they've done. So today's example, we're going to be looking at how this little section could be integrated across essentially your 4-5 majors, depending on how you want to look at it. Okay, so in this quadrant, let's start off with some accounting. Okay, so what type of accounting sections could we be looking at? Well, first of all, we've got inventory, so IS2 is definitely in play. It could be from us valuing this inventory, or they could tell us that there was an impairment or it was donated, whatever. IS2 inventory, we're looking at it. If they then go and talk about selling it, well, then we're looking at IFRS 15, revenue with customers, which could definitely also be some type of question along that line. I'd also be looking at then IS 36. There's potentially some impairment of stock or assets. You would need to be kept at the back of your mind. And then also we could be looking at some of your deferred tax. There could be some translation issues, or there could be something with regards to recognizing the interest of the loan and how that then affects deferred tax. We could also then potentially be looking at obviously some forex and the translation of that and discussion of the rates used, etc. There could even be some IFRS 13, some fair value discussions, the lower of net cost, etc. And because we mentioned there's a loan, we could also potentially be looking at IS 9. And that's just the accounting type of questions. And remember, with accounting, you build them up. It could either be discussions, it could be journals, or they could even throw us in something different, and we could be looking at business combinations where they potentially acquire something. And that could then link into one of our next topics, everyone's favorite, well, at least mine, which is finance. Okay, so I'm looking at Finman and strategy. So strategy, SRM. Okay, so we've got a loan here. We've got a loan. We could potentially be looking at sources of financing. So they could tell us there's other opportunities. Should we use a loan, or do we go with this loan, internal, external, etc.? So there could be a sources of financing type of question. We could be doing the cash flows, and this is either to evaluate some type of decision. There could be discussions on a merger or an acquisition. We could be looking at hurdle rates. You could also, which is essentially just discount rates. Based on the loan, we'd have to calculate the cost of the loan. We could do some strategy on whether they should move to Australia or enter into new markets. Question they love asking at ITC is qualitative factors. So they'll give you the numbers, and we've seen this quite a bit. They'll give you the numbers and you need to critique it. So qualitative factors, or you need to comment on what's wrong. So again, there could be a decision. They could have done a valuation for a company, and you may need to comment on what is wrong. That's another one they love asking in the new framework, essentially. Then, if we're looking at everyone's favorite, MANAC, there could be a relevant costing. So what's relevant? Something we've seen recently, absorption costing. So you need to do the absorption costing exercise, or just a costing type of exercise, and comment on that. There could be some standard variances, so variance analysis and calculations. Also with MANAC, it's discussion. So again, they could have done one of these, and you need to discuss and critique. Okay, critique doesn't mean you always have to find something that's wrong with it. If they've done something right, mention it. There's marks in that. But usually it's how should it look, and then it makes it easier. Okay, so with all of these things, both MANAC and finance, when you need to critique something, you need to have a basic framework of what it would look like in order for you to be able to do these things. Okay, we could also gain costing, relevant costing. There could be some form of decision. So what is the net present cost of the loan versus another loan, etc. Okay, we then move on, looking at taxation. Okay, there's going to be those foreign currency. Key thing to mention is, are they South African as defined, the company? In this case, they effectively manage here, so they're South African. Key thing not to lose track of. So therefore, where is income? All sources of income. There could be a question about cause and effect with regards to, where's the income So you need to remember some of your cases, etc. And for me, the key thing are the cases. Don't try to understand the details of the case. You just need to summarize the case into one. Like, what's that one about crossing the Rubicon? You know, just crossing the Rubicon. What does that mean? You have now gone from one type of business to another, and therefore, whatever happened to before doesn't happen now. Simple. You just need to simplify these things into that type of thing. There will then be section 24I. I mentioned foreign currency translation. There's 11A, very common one that people miss. You know, we think it's so basic, so we forget about it. There's interest payments on the loan. There could be forgiveness of debt. There's intercompany transactions. We're dealing with stock. There could be donation, or what is market value of stock, and then allowances, as well as potentially section 25D, translation of inventory. Okay, then lastly, moving on to the one that pays the bills for the most of us, auditing. Well, auditing, yeah, you know, normal substantive procedures. It could be design substantive procedures or comment on the substantive procedures. It could be the controls around it. You could then have to do a process description, weaknesses, and then improvements. So when I ask you for weaknesses, more often than not, what do you need to do? It could be governance issues, different jurisdictions, what applies, etc. Or they could ask you as an auditor, so you're the auditor and you need to do the risk assessment of inventory. Okay, key thing with auditing, one of my professors said was try to visualize the company. If you can visualize the company and, you know, treat yourself like a shopper or whatever, it makes it much easier to come up with the substantive procedures, what controls are in place, what process descriptions, what weaknesses, etc. there would be. Okay, and another key thing to keep note of is what source documents do you have? Because you cannot design procedures, controls, etc. if there are certain source documents that they do not have in place. But if you also know what source documents should be in place in an inventory process, it makes it easier